Well, good afternoon. Happy Friday, June 24th. Mark Milam here, your mortgage professional with Highland Mortgage. Let's talk about what's happening in the mortgage market. So, relatively calm week. Last week, incredibly volatile week. The worst day that we've seen in the mortgage-backed securities market, worst day that I've seen ever, happened on Monday. Not this week that we're finishing up, but the week prior. And then, of course, we saw the Fed raise the Fed funds rate by 0.75 of a point middle of last week, and then we closed out a really volatile week on Friday of last week. But this week has been relatively calm, at least as compared to everything else in 2022. And honestly, calm weeks in which we don't necessarily improve, but we don't lose ground. Those are considered wins here in 2022, given what's happened with mortgage interest rates. But I want to take a step back from the data for a minute and talk about 2 points, and 2 points that I've seen a lot of headlines about. Obviously, I do a lot of reading about what's happening in the economy, a lot of reading about what's happening in the housing market. And one of the things I've been reading about is, are we not headed for a recession in this country? A lot of debate about that. Seems like 50% of the people think, yes, indeed, we are headed for a recession. 50% think that, no, we're not. And rather than trusting what might be coming out of the mouth of the Federal Reserve Chairman, all due respect, a lot of what's come out of that mouth has not been 100% accurate over the past couple of years. Let's go back and look at history. I think history is maybe a little bit more of an important indicator. And what this chart represents are the Fed funds rate changes since 1955 against the recessions in the United States. And now these gray shaded areas are recessionary periods in the United States since 1955. And you can see that every single time that the Fed has raised the Fed funds rate substantially, we have gone into a recession, with a couple of notable exceptions, one here in 1966 and another here in 1995. Now, I'm not 100% sure what was happening in 1966, but I can tell you in 1995, this was basically the invention of the internet and online everything, and that sort of economic boom forestalled a recession there. But every single other time that we can point to, as the Fed has raised the Fed funds rate, what has followed closely thereafter has been a recessionary period. So I would tend to tell you that history is a pretty good predictor of the future. So what's happened in the past is a pretty good indicator of what will happen in the future. And yes, more than likely, in the next 12 to 36 months, we are indeed headed for a recession. And the good news for mortgage interest rates, at least during recessionary periods, is that interest rates tend to come down during periods of recession. Obviously, no one really wants a recession, but certainly when you've got 40-year high inflation, a recession is probably what's needed to get that inflationary pressure under control. All right, that's one topic I've been reading a lot about and thought we would address. The other topic is pertaining more to housing, and is now really a good time to buy. I mean, given the inventory situation, given how much homes cost now, given the interest rate environment, is now really a good time to buy a home? I think it's a great question. Let's take a look here at a quick presentation about, is now a good time to buy a home? So let's start out here and let's assume that you purchased a home in 2015, January of 2015, for $350,000. Okay, let's answer this question. Was this a good idea? So 2015, you bought a home for $315,000, and the appreciation rate a year later in January of 2016 was 5.9%. So housing appreciated on average in the United States 5.9% between January of 2015 and January of 2016, meaning your home that you bought for $350,000 is now worth $370,000. In January of 2017, the appreciation rate from the year before had gone up 6.1%. Now you're home at $393,000 and some change. 2018, the appreciation rate at 6.5%. You're now at $418,800. 2019, appreciation rate dipped a little bit, dropped to 4.4% over the prior 12 months. Your home now worth $437,000 and $250,000. To 2020, appreciation rate at 5.4%, just before we headed into the pandemic, $460,000, $860,000, and everybody knows what's happened over the past couple of years. 12.2% in 2021, and then in 2022, January of 2022, we'd realized 18.3% appreciation over the prior year, meaning the home that you bought in January of 2015 now worth $611,710. In 7 years, that's created wealth of $261,000. Folks, I understand it feels like a bad time to buy a home. It feels like the monthly payment is too high, but when you compare it to rent and you compare it to the generational wealth that you can create through owning real estate, could you really make an argument that now's a bad time to buy a home? Still a great time to buy a home. The average 30-year fixed rate since the Great Depression, 6.25%. We're still below that today. We're still below the average 30-year fixed rate since the Great Depression. Our short memories, we go back to the all-time historic low interest rates that we had in 2020 and 2021. Of course, we're not there anymore. Of course, rates have risen quickly. But when you put this in historical context, when you see the data in terms of home price appreciation, even in a subpar year where it was 4.4%, could you ever make an argument that buying a home is a bad idea and that now is a bad time to buy? If I can be of any service to you, please don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend, everybody.